Very good morning to our listeners. Hope you all had a fantastic weekend. A quick look ahead then in terms of some of this week's themes, starting off with the UK, where we've had a continuation of dovish comments in weekend press from the Governor Mark Carney and NPC member Andrew Haldane. Allied that with the likes of Barclays and HSBC, who continue to join the calls for pushing back their expectations of the first rate hike from the Bank of England, has contributed to further flattening of the UK curve. This all comes ahead of Tuesday's release of CPI, which will be closely followed given the dovish quarterly inflation report we saw just last week, which did suggest that headline CPI year on year will fall below 1% within the next 6 months. So all eyes and ears will be on whether that deflationary scenario plays out of falling inflation, particularly given some of the headwinds in Europe and falling energy prices of late. That would mean that Carney would need to write a letter to the Chancellor Osborne explaining why we are below target of 2% by a considerable margin. Elsewhere, looking in Europe, we do have ECB's Draghi speaking in Brussels today in a parliamentary hearing. This coming as he will look to justify the various unconventional measures the ECB has embarked upon in recent months to officials across Europe. With ECB's Mersch already speaking this morning in a Newswire interview, has suggested that the ECB could look at unconventional measures such as buying corporate bonds, ETFs or even gold in terms of them looking to further stimulate the European economy, with outright QE still seen as a very last chance resort measure from the European Central Bank. Elsewhere, we'll look ahead to Wednesday when we have the FOMC minutes stateside, where this will be from the meeting when they concluded their QE bond buying program, but all analysts and traders will be looking at whether or not they'll keep that considerable time pledge in terms of interest rates to stay low for the foreseeable future at least, and also as well what the Fed's interpretation is to oil prices, which have been plummeting of late, and how that will feed through into their inflation expectations. That's pretty much the key three things that I'll be touching upon today, so I wish you all a fantastic week and good luck.